Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we're going to be talking about a few things around Ripple and XRP. But first I want to start with this report from Visa and talking about crypto in general, consumer attitudes and all that kind of stuff. If we come down here, there's a metric that I think a lot of you will be very excited about learning, and it is the amount of crypto adoption out there in some of the global countries, as well as the age group of 18 plus. So we do see among adults that have discretion over their household finances, there is near universal awareness of cryptocurrency, 94%. So 94% of them are aware of crypto. Active owners only make up 21%. Passive owners make up 11%. Curious makes up about 21%. Skeptics 11%, and unengaged are about 37%. And here you guys have the United States. So the United States active owners 27%. So the developed markets overall is about 19%. Emerging markets about 23%. And you can see the full-on breakdown here in general from the US to the United Kingdom to Hong Kong to Germany to even Australia. And we do see emerging markets, Argentina, Brazil, and South Africa. So 28%, 22%, 20%, 27%, 18, 16, 18. These are low figures in my opinion. And we do see passive owners, about 9%, 8%, 13%, 9%, 9%. We do see 13, 12, and 16. This should show you, and it should be proof on how early we actually are to crypto. Now, the next big thing that a lot of people are probably going to want to learn about is financial institutions. So let's come down to financial institutions in general. So recently, and I think it was in my video from yesterday actually, I was talking to you guys about banks. And I said banks will have no choice but to offer crypto driven use cases, crypto exposure, and just crypto custody in general to their public users and clients. Why is this the case? Well, when we look here, interest in purchasing cryptocurrency from their bank if offered, 87% active owners, 81% passive owners, and 81% curious. We do see the involvement of banks also has a meaningful impact. So we do see half of the crypto-aware consumers are interested in their bank offering cryptocurrency, 50% total, including 87% of active owners, 81% of passive owners, and 81% of curious consumers who are interested in purchasing cryptocurrency if it were offered by their traditional bank. Additionally, more than a third of crypto owners indicate that they are likely to switch to a bank that offers crypto products within the next 12 months. 39% owners. Let's think about that. So as we look at institutional, or like the financial institutional area, their own clients would rather switch to a bank that offers crypto products than to stick with the bank that they are with now. This is why I say that banks need to innovate and adopt, or they will die. They will. I mean, at this point, I highly suggest looking into these reports, because these reports give us a great insight on where things are headed. In my opinion, financial institutions need to adopt crypto or they will cease to exist. They're going to lose a lot of their clientele. Their clientele is essentially urging them to do so. Now, of course, this is just one aspect. I do think that we will see mass adoption of crypto, and I do think that banks will start to not only offer it, but adopt it. And over here, we have another report. This is from Ripple back to June of this year. Blockchain stands to change the world. This talks about the impact of crypto. We do see research highlights that 75% of their survey respondents at global financial institutions think that blockchain will have a massive or significant impact on business within the next 5 years. And then they do also mention the leaders from Latin America and also Asia Pacific lead the charge, with more than 80% of respondents in each region voicing this sentiment. And this does talk about the efficiencies behind, of course, crypto. And we do see powering faster, more affordable payments. We've seen firsthand that one of crypto and blockchain's most powerful use cases is for payments. I mean, payments is the big deal here because when you look at the benefits here, market expansion, new revenue streams, real-time settlement, payment transparency, and improved data quality. And again, this is centered on cross-border payment solution with Ripple, aka powered by XRP, and you can see all the efficiencies there. And then down here, we do see enterprise crypto liquidity needs, which by the way, I don't know why there's such a blank space here. It's kind of weird, but the benefits of crypto are not only limited to payments. This new infographic also showcases the growing interest and demand from individuals and businesses that want to hold crypto, create new connections with retailers that accept crypto, buy crypto from their banks, or use it to send money to friends or family. Listen to what I'm going to tell you right now. When we look at all of these use cases and we look at everything that Ripple has been focused on for a little bit of time, the reason why we talk about XRP a lot on this channel is because I believe that going forward, we will see XRP be at the center point of crypto. Already, and I say already, we've seen incredible growth for XRP. But Ripple, as a company that chooses to utilize XRP, by the way, for their products, sees the value of crypto already. They also see where this market is headed. I believe that this entire trend around crypto is going to increase. We do see this trend has increased demand on companies to source, hold, and trade crypto on behalf of their customers. Critical to maximizing these functions is having an enterprise-level liquidity provider, aka Ripple's liquidity hub. This statement here is incredible because it's focused on customers. They have to move towards sourcing, holding, and trading crypto because of the clientele that is already on these companies, we'll say networks, right? But it also goes into banks, right? Banks have these massive amounts of customers and clients that want crypto. They want to hold crypto. They want to trade it. They want to source it. They want to hold it. They want to do whatever they want with crypto. They are going to demand that they do this. This is going to create a huge amount, and I mean a huge amount of adoption of crypto because it's going to be offered by all these major, we'll say legacy and we'll just say banks, right? We'll just say banks just to kind of dumb it down. But all of these major banks, these companies, these giant entities out there that have, we'll say, hundreds of thousands to millions to tens of millions of clients, all of them are going to swarm in on crypto at such a high rate that I just don't see how this entire market doesn't balloon. And we also see over here, this is another report. This is key takeaways. In contrast to the recent past when digital currencies were used as a means of payment by very few businesses run by crypto enthusiasts, nowadays more and more companies are willing to accept crypto thanks to low fees, fast transaction speeds, and security it offers. Companies from different industries already accept cryptocurrencies, stake their coins using decentralized finance protocols, and potentially benefit from high yields they offer. Crypto.com reported in late 2021 that approximately 75% of its clients would have paid in crypto for goods and services. El Salvador and the Central African Republic have already adopted Bitcoin as a legal tender. Merchants that keep some of their funds in crypto should be aware that they might be subject to capital gains tax. Obviously talking about taxes behind this. We do see most companies employ a gateway to process cryptocurrency payments as well. Now, again, this is just kind of key takeaways around this full report. This is talking, by the way, about how businesses can accept cryptocurrency payments. We do see Ripple being the first one down here, by the way. Real-time, low-cost, compliant payments with carbon-neutral crypto. Our company, 50-plus countries in market, 10 years in business, 500-plus employees worldwide, 9 global offices, $5 billion payment volume run rate, and carbon net zero by 2030. And you do see why Ripple, free up working capital, offer lower cost payments, send faster payments 24/7, 365, expand into new markets. And we do see a lot of their customers labeled here, some of the biggest ones out there, by leveraging the carbon neutral digital asset XRP as a bridge currency or a bridge between currencies. Ripple provides a fast, low cost, and sustainable solution for cross-border payments. This is incredible to see, and there's a lot more to break down here behind this. And you do see even XRP being mentioned down here. You also see Alchemy Pay, which I've talked about on this channel as well, which is very interesting in terms of payment token. But this is why I do believe that we will see a huge demand from the business side of things as well around cryptocurrencies, just because of the benefits that are offered here. But we also see over here from Deloitte. Deloitte has an incredible insight around crypto adoption. We actually see a few things. So, sentiments around digital currency, we do see 85% on all three bounds here. My organization anticipates that digital currency payments will be ubiquitous in our industry in 5 years. We expect our suppliers to accept stablecoins. We expect our suppliers to accept cryptocurrencies. Crazy. Huge. Current customer interest in digital currency, minimal interest, 2%, moderate interest, 32%, significant interest, 64%. Priority of enabling cryptocurrencies, high priority, 38%, very high priority, 47%. Priority of enabling stablecoins, 44%, 39%. You could see the growing demand here. I mean, like, listen, mass adoption is becoming a major focus point here. And also, percentage level of investment in enabling digital currency payments by organization revenue size. Check this out. So over $1 million is up here at 6%, 15%, 26%, and 54%. Percentage level of investment in enabling digital currency payments by organizations revenue size. Under 10 million, 10 million to less than 100 million, 100 million to less than 500 million, and 500 million and above. So again, 54% over 1 million in the 500 million and above area. That's massive. And again, we do see a little bit more down here, a percentage in integrating digital currencies into finance department functionality. Again, you see the valuations down here within the next 12 to 48 months as well. No current plans, already integrated and using internally. You do see only 2%, 1%, and basically 0% over here. So we do still have a large range of demand here for crypto, and I do think that it's only going to continue to increase. And we do see percentage of respondents investing more than $1 million towards their digital currency development over the past year. Strongly agree. 28% agree, 24% neutral, 16%, and only 3% disagreeing. We do see percentage of respondents investing more than $1 million towards their digital currency development over the past year. Over the next 12 months, how does your organization expect customer interest in digital currency payments to change? Significant increase is 33%, increase is 23%, and significant decrease to neutral would be about only 12%. So again, you could see a large factor really kind of growing here, and there's a lot more to this. I mean, like, you could really kind of look at it. I mean, at the conclusion, we do see our survey confirms the direction and strength of the trajectory towards broad adoption of digital currency payment solutions across U.S. retail organizations. Respondents understand the value and benefits of such capability and have taken steps towards enablement. Yeah, I do think that end goal here, we will see mass pinnacle adoption of crypto. The very thing that I want to put a focus point on is on-demand liquidity growth. So Anderson posted this over on Twitter, and we do see on-demand liquidity growth. Now, this is about only $2.8 billion in one singular quarter, by the way, I should say, because this is still a very large amount. I mean, even if you add all of this together, it's like over $7 billion or so in just 1 year alone. They are moving about $30 million a day in quarter 3 of 2022. So $30 million per day, accounting for about like 2.7 billion if you go off of like the 90-day quarterly, daily average. It could spread to about like 93 days, 94 days or so, whatever. But we'll just go off the 90-day standard. The thing that's very interesting to me is that we're only doing about $30 million per day in on-demand liquidity volume. Imagine the amount of money that would flood in if we did go after some very large entities. If we're doing just like $300 million per day in a singular quarter, that's $27 billion per quarter. Think about how massive that is. So if we did that, that would be about $108 billion per year being moved by on-demand liquidity. Going off of all of these statistics alone around the adoption of crypto, especially in the business and financial institutional grade area, I really don't believe that we won't see massive on-demand liquidity volume as well as adoption. So with all that in mind, I hope that you guys enjoyed this. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.